Okay, now we'll get to the important stuff. There's always something to worry about. This is the difference. This is what happens in the stock market. Because, see, everybody's got the brain power to do well in the stock market. The question is whether you have the stomach for it. That's the key organ in the body. There's always something to worry about. I went to school, grew up with a kid in the 50s. In the decade of the 50s, there's this big theory that the Depression was caused by a stock market crash. Totally wrong. Less than 1% of Americans owned stocks in '29. We had this big-time recession. In fact, it was a depression. That's what, it wasn't caused by the stock market. The economy went down, the Federal Reserve raised interest rates, and we had a big-time depression. In fact, we had several depressions like that from 1850 on. This was only one of about 8 depressions since 1850. So people weren't buying stocks in the 50s because they thought that another Great Depression was going to happen. In addition, people were very scared about nuclear warheads and nuclear war in the 50s. People were building fallout shelters, stocking with canned goods. There's something about going to Vermont, building a fallout shelter, putting canned goods in it, that you don't buy Minnesota Mining or you don't buy East Dakota. I mean, the syllogism just doesn't work out that you're buying lots of water, buying a shotgun, buying frozen food that will stay in the freezer with your own generator, and you're looking at growth stocks. Doesn't seem to work out that way, you know. But people are worried about a depression in nuclear war in the 50s. And then, I mean, the warheads, they couldn't do much damage back in the 50s. Now one of these Stan countries, you know these Kakistan and Kazakhstan, all these Stan guys that have spun off these Friedman building spin-offs from the Soviet Union, every one of these little countries has enough warheads to blow the world up 88 times. Right? Who's built a fallout shelter there? You know, we stopped worrying about it. I mean, there's always something to worry about. In the 50s, it was depression and nuclear war. The 50s was the best decade this century for the stock market, except for the 80s. Only slightly better. The 80s are only slightly better. People didn't expect a lot. We had an okay, it wasn't a great decade. They just didn't expect much. We made it through. And the stock market was terrific. Do you remember when oil went from 4 to 40? Remember that period? Oil went from 4 to 40, and the experts said it was going to go to 100, and all the countries of the world were going to go bankrupt. And then the big banks were going to go bankrupt, and we're going to have a Great Depression, and the stock market was going down. And I remember when the money supply was growing too fast, and they said we're going to have a depression, then it was growing too slow, we're going to have a depression. Then the Mideast was going on in the world, remember that one? The Mideast was going on in the world, they weren't going to buy our bonds, and the market crashed, and we're going to have a depression. Then Japan was going on in the world, remember that one? Japan was going to have all the assets, and they weren't going to buy our bonds, and we're going to have a depression. Within 3 years, the Nikkei Dow had gone from 40,000 to 16,000. The banking system's in trouble, and people said Japan was going to collapse, and we're going to have a depression. You know, commercial real estate, global warming, you know. And I think as the older you get, the more nervous you get about these things. I think it's very valuable. I think while younger people are better investors is they're not worried. They haven't heard about all these crises. And they're with children. I think if you don't have any kids, you got to rent some kids for the weekend. You know, get a 7-year-old and ask him if he knows about the money supply, you know, how fast it's growing. Ask him if he knows about the shape of the yield curve is the wrong shape of the yield curve. You know, ask an 8-year-old if they know about that. 8-year-olds have a very high expectation about the next 20 years. That's what you need to do. The more you get away from 8-year-olds, the more you get away from 11-year-olds, the more you start reading these crazy things you read over the weekend. In fact, from 1955 to 1985, the stock market went up a grand total of 1,000 points, but it was down 800 on Mondays. So it was therefore up 1,800 on non-Mondays. It wasn't an accident. The stock market went down October the 19th, 87 was a Monday. People over the weekend become economists and portfolio strategists. You know. So I don't worry about that. I know we've had 96 years a century, and the market's fallen 53 times. We've had 53 declines of 10% or more. So 53 declines in 96 years. Once every 2 years, we have a 10% decline. Of the 53 declines, 15 have been 25% or more. So 15 in 96 years, about once every 6 years, the market falls 25% or more. That's what we call a bear market, you know that. And it's going to happen. I don't care when it's going to happen. I would love to know. Obviously, it would be very useful to know when it's going to happen. It doesn't make a difference to me. Corporate profits will be a lot higher 8 years from now, a lot higher 16 years from now, a lot higher 30 years from now. That's what I deal with.